Did you know that a whopping 55% of billionaires' wealth comes from smart investments? That's right. More than half of their enormous fortunes aren't just from their businesses, but from putting their money to work in the right places. Welcome to today's video, where we're going to break down the investment habits of billionaires. We'll look at where they invest their money, how much time they spend on investment activities, and even the common mistakes they make. All of this will be backed by reliable data and real-world examples. If you're keen on making your money work as hard as you do, you'll want to stick around for this one. Significance of investment. You might be surprised to learn that on average, about 55% of a billionaire's wealth is generated from investments. It's not just about starting a successful business or inheriting a fortune, it's about making that money grow. Investments are the silent engine that keeps the wealth train moving at full speed. Now, let's put this into perspective by comparing it with the general population. According to various studies, the average person only invests about 5% to 10% of their income. That's a stark contrast, isn't it? While most people are saving or spending, billionaires are heavily invested in making their money multiply. But why is this important? Well, it highlights the critical role that smart investing plays in wealth accumulation. It's not just about having a high-paying job or a successful business, it's about what you do with that money afterward. And if you look at the numbers, it's clear that investing is a cornerstone in the financial strategies of the ultra-wealthy. This disparity serves as a wake-up call for the rest of us. It underscores the vital role that investments play in wealth creation and maintenance. If you're serious about financial growth, then taking a page out of the billionaire playbook might not be such a bad idea. Gallup's latest estimate finds that 61% of U.S. adults own stock, mostly in the form of retirement accounts like 401ks. This is the highest it has been since 2008. Asset allocation. Billionaires diversify their investments into several categories. About 30% goes into stocks, 25% into real estate, 20% into private equity, 15% into commodities like gold and oil, and the remaining 10% into alternative investments like art and collectibles. This isn't a one-size-fits-all model, but it gives you a general idea of how billionaires allocate their assets. Take Warren Buffett, for instance. He's a big fan of stocks, with significant holdings in companies like Apple and Coca-Cola. Then you have someone like Jeff Bezos, who, aside from his Amazon shares, has invested in startups and even a space exploration company, Blue Origin. On the other hand, you've got people like Larry Ellison, co-founder of Oracle, who has a penchant for real estate. He owns historic garden properties in Japan, a historic tennis club in California, and even an entire Hawaiian island. And let's not forget about Elon Musk. While he's heavily invested in his own companies, such as Tesla and SpaceX, he's also shown interest in cryptocurrency, notably Bitcoin. The key takeaway here is that billionaires don't put all their eggs in one basket. They spread their investments across various asset classes to mitigate risk and maximize returns. And they're not just throwing darts in the dark. These are calculated decisions backed by extensive research and often a team of financial experts. Investment habits of billionaires. 1. Long-term investment strategy. You know what they say, Rome wasn't built in a day, and neither is a billionaire's fortune. According to Statista, the primary investment goal for retail investors worldwide is retirement. This inherently long-term focus is a cornerstone of billionaire investment strategy. They're not looking for quick wins, they're playing the long game, often holding on to investments for years or even decades. 2. Diversification. Don't put all your eggs in one basket is more than just an old saying. It's a principle that billionaires live by. They diversify their portfolios across various asset classes, stocks, bonds, real estate, and even art and collectibles. This approach minimizes risk and provides multiple avenues for growth. 3. Regular monitoring. Time is money, and billionaires know how to spend it wisely. Reports suggest that they dedicate around 3-4 hours each day to investment activities. This isn't passive screen time, it's active monitoring, decision-making, and strategizing. 4. Reading and research. Warren Buffett, the Oracle of Omaha, spends a whopping 80% of his day reading. Whether it's annual reports, market trends, or financial news, billionaires understand the value of being well-informed. Knowledge is power, especially when it comes to investments. 5. Data-driven decisions. In the age of big data, ignoring the numbers is like sailing without a compass. Tech-savvy billionaires like Elon Musk rely heavily on data analytics to make investment decisions. They use complex algorithms and predictive models to gauge market behavior. 6. Risk management. Life's a gamble, but that doesn't mean you shouldn't count the cards. Billionaires are willing to take calculated risks. They often employ advanced risk assessment tools and techniques to evaluate the potential downsides of their investment choices. 7. Investing in innovation. The future belongs to those who prepare for it today. According to Statista, there's a growing interest among investors in new products and technologies. Billionaires are often early adopters of innovative technologies, understanding that today's novelty could be tomorrow's necessity. 8. Sustainable investing. With great power comes great responsibility, and billionaires are increasingly recognizing their role in shaping a sustainable future. ESG, environmental social governance factors, are becoming integral in investment decisions, reflecting a long-term vision that goes beyond mere profit. 9. Expert consultation. Even the smartest minds value a second opinion. Billionaires often have a team of financial advisors, tax consultants, and legal experts to guide them. They understand that investment is a team sport, and they're the captains making the final call. 10. Continuous learning. The only constant in life is change, and the investment world is no exception. According to Statista, 51% of investors believe that financial providers are the primary stakeholders in providing investment knowledge. Billionaires make it a point to stay updated, continually adapting their strategies to navigate the ever-changing financial landscape. So, you've heard all about how billionaires manage their investments, but how can you apply these principles to your own financial life? You don't need a team of financial advisors to make smart investment decisions. There are plenty of tools and resources available that are statistically proven to help. For example, robo-advisors are becoming increasingly popular for their data-driven investment strategies. According to Statista, the robo-advisors market is expected to grow by 40% by 2025, indicating their effectiveness and reliability. Another resource to consider is investment apps that offer real-time market analysis and insights. These apps can help you stay informed and make timely decisions. According to a study by eMarketer, 45% of investors who used investment apps felt more confident in their investment choices. We've covered everything from long-term strategies and diversification to the importance of continuous learning and expert consultation. But remember, these habits aren't exclusive to the ultra-wealthy. They're practices that anyone can adopt to improve their financial standing. Start by dedicating time to your investment activities, just like the billionaires do. If you found this video insightful, please give it a thumbs up, subscribe to our channel, and hit that notification bell.